And we've got the October trade data right there. So you've got imports coming in at 39.45 billion. That's versus 43. So that's a slight downtick in imports. Let's take a look at what the expectations were for imports.
So $43.15 billion.
Yeah, that was the expectation. An increase of about 26% to 43.15. And instead we've got a 39.45 billion number. That I would imagine is also taking into account lower crude oil prices, because the poll would have estimated lower crude oil prices, unless our buying price has come in even lower than people had calculated based on the basket, right?
Indeed, it looks like that. So that would mean the trade deficit is lower than expectation, $13.36 billion versus $14.25 billion, because exports have come in line with the estimates that we had. So if you see the overall trade deficit data, that's come down, Menika, month on month from $14.25 billion to $13.36 billion.
Which in itself is a good piece of news, except that, you know, one needs to have some more detail as to why we've seen this decline in imports, because that will be, or decline versus the expectation is quite substantial. So that will be the big one. Oil imports down to 12.36 versus 14.45. I think the number might be that one, because I think our poll expected crude oil imports to be at 14.47 billion. That's up about 10%. Latha's in studio with us now, so maybe she can throw some more light. We expected crude oil imports to be up at 14.47 and they've come in lower. Is that the number that you're working with?
September data, that was 14.47. So the fact that it is the October imports of crude oil have dropped to 12.36 is the reason why we are having a lower import number.
Is it that's the only reason? Because what
at the moment that's all the data we have.
Number?
No, there weren't that clear expectations. The expectation was
because
only
much
on
of this would be on account of oil prices.
Also volume. Last time even the volume had gone up.
Okay.
These are a bit difficult to track in volume terms month on month, but your guess is very good that it could have been because of the fall in prices.
Yeah, I would think common sense.
No,
right?
they had fallen even in the month before, and so one was expecting that in September also there would be a positive impact. Actually, we saw a very big rise in September in oil imports. They rose by 9.7%, which was a bit untenable. Now it has come down to 12.36, which is actually our normal run rate. Even in August, it was about 12.8 billion, the crude oil imports. Clearly, the trade deficit has gone down only because imports have declined. But last time imports grew by 26%.
Latha, just one second. Just hold that thought. The Nifty has made a new lifetime high at this point in time. It's important to point that out. 84.18 now on the Nifty. The Sensex hit a new lifetime high just about 5 minutes back. But maybe because of this trade data, the Nifty has also got that added push and is now at 84.19, Latha. So that's an all-time high.
Exports are also, I mean, year-on-year exports are down 5%. I'm still waiting to see what the month-on-month number is exactly. I think it just missed me by.
No, it was 28.9 last month, and this time it is 26 or something like that, 26 point something. So exports month-on-month are lower.
They are,
but imports are so much lower.
Well. I thought I saw 5% lower year-on-year. So.
No, year-on-year they are a little higher perhaps, so but month-on-month they are lower.
Yeah.
But nevertheless, I think the 1 billion fall in trade deficit is largely because imports have fallen even faster.
Sure.
Actually, the median I got in my poll of about 10 economists was that it will be 12.2, the trade deficit. It has actually come in a little higher. It's come close to the higher end of the range. The highest I got was 13.8. So it's come at the higher end of the range. We used to average 13 billion until all hell broke loose last year when the rupee went for a toss.
Right.
So 13.2 is not a very comfortable figure, but okay, we are a larger economy now, so 13.2 can be taken in our stride. Ideally, one would like the average run rate monthly to be a little south of 13 billion, but the fact that we have come down from 14.25 billion last month, that is September. September was really ugly in terms of trade deficit. That it has come down to 13 billion is a positive. Perhaps it would work its way lower as well. And oil has already started falling. So maybe we should begin to see a more positive
We
impact.
do have some guests, Latha, standing by. Aditi Nayar, economist of ICRA, joining us on the line from Delhi. Aditi, this 1 billion decline in the trade deficit is definitely good news. You would attribute most of it to lower crude oil prices and therefore lower import number?
You know, I think we need to look at three specific sets of, data within the disaggregated data for October. One is, what is the trade deficit on the oil side? Because clearly this is something that should have come off from last month. Because crude oil prices are lower. There's no point looking at exports and imports of crude oil separately, but rather I think it's better to look at the trade deficit for oil. So that should have come off substantially, not only because of the price, but also because imports possibly were back-ended in September with a big spurt in volumes that we had seen, which should have corrected in October. The second thing to look at is, what really has been the quantum of gold imports in October, because earlier reports towards the end of October was suggesting around 50 tons, and I think later reports were quite alarming at 150 tons. So, that a multiple of 3 in terms of tonnage would have had a major impact on where the actual trade deficit stood for October. And I think the third thing then to look at is, how are non-oil exports behaving? That really is going to be the key going forward for sustaining lower trade deficits. My guess is that non-oil exports have not done particularly well in October in year-on-year terms or in month-on-month terms. And that does, that is a cause for some concern given the way that the growth outlook is becoming more bleak for Japan and the Eurozone, etc., because these areas do account for about 20% of Indian exports.
Samiran Chakraborty of StanChart Bank joins in as well. Samiran, your first take on these numbers as you see them?
Well, export numbers have been softer than we had anticipated, but that has been to some extent counterbalanced by softer imports as well. So overall trade deficit has been quite in line with our expectations. In fact, the good news is that the oil import bill has dropped substantially. Without that drop, we would have seen a pretty ugly print on the imports. We still need to see the gold imports to figure out that to what extent the non-oil, non-gold imports have risen. My sense is that trajectory might still be quite strong. But overall export growth declining again is something of a cause of worry. We expect from next month the base effect to turn favorable, and that should help export growth to turn positive again. But we'll have to wait and see how those pan out.
I think it's a 4 billion import number for gold, Samiran. That is a bit of a shocker.
No, not really. In the last few days, we have been hearing that this has been the month when about 148 tons of gold have been imported, which is the highest this year. In fact, if the 4 billion number is correct, then
178 billion. 4.178 billion to be precise.
Then it is the highest number after May 2013. So clearly gold imports have been much stronger, and if you add September and October together, then in 2 months we have imported close to $8 billion of gold. So that's something of a worry.
Comparable numbers look like, I think, on gold. October last year was 68 crores, 6,768 crores. Well, and October this year is 25,630 crores.
Since these are widely tracked in dollar billion, I guess that's easier. Last time it was 1 billion.
So
last month,
so it's a quadrupling almost of gold imports in that sense. So Aditi's fear that she expressed in her first response has played out in these numbers.
There's a bit of a base effect. Last time the gold controls were announced in July, when the dollar India rupee went for a toss. People were still grappling, and afterwards Reserve Bank refined the rules and allowed more.
We haven't lifted those controls, and yet we've seen a spurt in gold purchases, which could be linked to where prices have gone.
We did liberalize it a bit. We allowed more.
But it hasn't sort of been lifted.
No, not lifted at all.
Exactly.
It's very much a quantitatively controlled import mechanism. Would 4 billion be alarming?
Both gold and silver have shown a big jump on a year-on-year basis. 278% higher in gold and 135% higher on silver. Of course, silver, the absolute numbers are much smaller than gold. 4,200 crores, but 25,630 crores on gold.
Also, no, I just want to add that last September, October were all unusually low months for gold and silver because people were getting accustomed to the new rules of the Reserve Bank. But even then, 4 billion, if it was the strike rate, I would like to know from Samiran, what will be the future course of trade deficit? We don't get below 12 billion, you think?
That's going to be tough. In fact, what could have happened is that last September-October festival season, there was enough inventory already in the system to serve the demand. But this year the inventory is over, so when the festive demand came in, there was no option but to import gold. I'm not very sure how the relaxations affected, but it could have some impact. But if 4 billion gold import continues, then even with a very good oil import number of about 12 billion, which we saw this time, we are seeing that the pressure on trade deficit is very much present. So 12 billion...
Samira, do you remember the November numbers? Because if I remember correctly, Diwali last year was in November, Diwali this year was in October. So I'm not sure if that has even the minorest of impacts on, the substantial increase we've seen in gold import. Just what the November numbers of last year would be to give us a sense of what festival buying is, because we're comparing this to October last year, whereas actually festival season to festival season comparison might throw up a different number whatsoever.
If my memory serves me correct, the number was about $1 billion. We have not seen a 2 billion plus number in gold imports for a long time. So FY15 things are changing a bit. We are seeing several months of 2 billion plus of gold imports, and now we are seeing a 4 billion plus as well.
So would you say that now, what would your annual estimate of trade deficit be? Should we get used to a 13 billion run rate monthly?
We will now have to get used to a 12-13 billion run rate, given that both gold imports as well as non-oil, non-gold imports picking up. But the critical determinant will be the export growth number. This has been a little bit of a shocker that this has been about 2 billion lower than what we were anticipating. So we'll have to see where that trend goes. But if exports do not pick up, then we're definitely in the range of 13 billion, not less than 12 billion that we were projecting earlier.
All right. Thanks very much for that, Samira. And Aditi, thank you very much for joining us as well. Latha, thanks very much. I'm sure if you spot anything that's more interesting beyond what we've already discussed.
No, just the overall number is nothing much to celebrate about. It is a little worse than we can manage. Hopefully, in the months to come, oil imports will start falling and our exports won't fall so much. But 13.3 billion is not a number of great comfort monthly.
No, it isn't.
It's not as uncomfortable as last month's 14.3 billion, but the Reserve Bank will be happier if it came closer to 12.5.
Yeah, which I think will depend in a big way on, where oil prices also go from here on. Right?
Also whether Europe recovers.
Yeah, that too. Thanks very much for that, Latha.